Welcome to Markets Now. I'm Michelle Rourke with your Toy Ag Trader Talk. Well, the livestock futures leaning mostly lower except for the nearby live cattle contracts on Friday, while the grain trade managed to end mostly higher. It was kind of a choppy session, but let's talk a little bit about the grain trade, Garrett, especially since we've been putting in weather premium, but we're running up into some chart resistance areas in a lot of these markets, aren't we?
Yeah, we are. The one thing is corn has kind of been left, being pulled, dragged reluctantly higher by this wheat rally. Last time we had July wheat trading $7, corn is pressing $4.75, and we're still about a dime away from there right now. Obviously the farmer sold in here. The money market, managed money is covering. But today's price action had a very holiday trade feel to it. In fact, corn was led by the new crop, which you look outside the window and the heavy rains we've had this week across Iowa and the flooding, et cetera, et cetera. You can understand why new crop is leading. But then you look at soybeans and it's bull spreading's leading there. The old crop's leading, and talk that China's bought a couple cargoes off the PMW this week. Sounds like they bought some cargoes from Argentina and a couple more out of the PMW opt origin in the last 24 hours. I think that that makes sense that you see in some of the old crop rally, and if there is a flooding issue at this point, we're kind of too late for acreage switching. You're probably looking more at abandonment, so it's not necessarily a downward force on new crop soybeans.
Yeah. So since wheat has been the leader, is there enough gas in the tank here now that the funds have peeled off of so much of their short position? From a weather perspective, do you think there's enough global concerns to keep going here?
I think there is. There's you have to watch price. Corn or wheat really struggle at $7 here in July. I do want to take look at these deferreds and the carries in the market. Considering the 8 cents a month storage rate, we have a lot of carries in the market, and that's pushing some of these new crop values, 2025 values, into levels that may be profitable for producers who have soft red wheat to sell. That being said, this Russian wheat drought, this Russian wheat frost has caught the attention of the institutional trades, and they're going to drive the trade. Wheat's going to do wheat things, and it could continue to rally. Now, that being said, wheat corn is trading at its highest level since the Black Sea Russian invasion. It's been lower the last 3 days. So if we see a little bit of correction there, that may tell you that this most recent move is probably coming to an end.
Yeah. So corn has been, like you say, following the wheat market, but do we have weather concerns there that we're watching? I mean, are you worried about some of these planting delays, especially? We got like 20% of the crop left to plant in a really, really wet weekend ahead of us.
Yeah, it's a wet weekend. You're probably right. I mean, the print number was 70%. We're probably close to 20% left. I think they'll get it in. I think Illinois' final planting date is like June 5th. Some of the Western Corn Belt states are starting to get into, I think it's Monday or so. I don't have the map in front of me, but we're coming up on those dates. And it's May, and being in this business 25 years, I do know that Iowa tends to do better as far as corn yield and dry years than wet years, just because of the soil types and how their ability to hold water. But that's not an argument that I'm willing to get into on May 24th.
Yeah, no doubt. What about the demand side of the equation, though? Ethanol grind is picked up. Exports are 30% higher than a year ago on our totals. So are we able to chew through some of this over 2 billion bushel ending stocks to maybe continue to support prices or not?
The domestic demand is strong. The only thing that's going to be a real game changer is if China comes back into the market and starts importing corn. They're the ones that can really move the needle as far as making a sizable change to the S&Ds. My contacts in China are saying that, China overbooked Brazilian corn. It was pretty obvious they were booking corn hot and heavy to the point where it depressed their domestic prices. And it concerned the government to the point that they were worried about corn acres. So they kind of put the kibosh on corn imports. Now, that being said, they expect corn imports from China to pick up here once corn planting over there wraps up. Now, the question mark is it's May. When they come back to the market, will that be into the Safrinha time period, and they just skip the U.S. entirely? But if we could get some Chinese corn business in the next 2 months, that would definitely help our situation.
Yeah. So what about soybeans? We've gotten a little support from the narrative with flooding in southern Brazil, as well as China maybe coming in for some all crop soybeans. But, what do you think we have to keep moving this market higher?
Well, that's the other story is things are kind of changing here. We've had a poor NOPA crush last month. Crushers are kind of slowing down. That in turn has kind of created some tightness in the meal supplies. But at the same time, we continue to import majority of our biodiesel needs from out of country, and not necessarily relying on soybean oil. So domestic crush looks like it's potentially arrows pointing down. But if there is a South American production issue, the cash markets are saying that maybe there is. With China buying these cargoes off the PNW, it's stockpiling. It could be just government, but the fact that we're competitive with Brazilian beans, considering this crop that they had on last week of May, that shouldn't be the case.
Let's talk about the cattle market. We had some record high prices for cash trade in the north this week, yet the board setback. Was that just some caution ahead of this cattle on feed report, you think?
Yeah, the front end cattle seem like this 184 is just an absolute wall. We had an interesting week. We had another avian flu case come out, or human case of avian flu. We thought, oh boy, here we go again. They're going to hammer the board. The market kind of absorbed that selling fairly well. But the board just seems really it really struggles at this 184 level. And it's interesting, though, is that you saw a fairly decent move in the June-August spread, which, if cash is going to continue to stay firm, that should be reflected in the spread if the flat price or if the board can't rally.
What are you watching in this cattle market going ahead? Can the cash market lift the rest of the board or the futures board? Because we obviously do have the futures at a discount.
I think every cattleman out here is cautiously optimistic, but they're also looking over their back shoulder. We had the box beef cutout values that absolutely explode week to 10 days ago. Here we are into the Memorial Day weekend and into the summer grilling season. We realized that at some point the other shoe is going to drop. We just don't know when, and we're always kind of surprised that we keep on plugging along, but we know that the train is going to stop at some point. I think that people are still buying beef. They may not be out here wanting to buy a $40 steak, but they're still buying beef, and ultimately that can keep this train going a little bit longer than we expect. I've been waiting on an economy collapse, waiting on anything, and it's just a function of how tight this cattle market is. See if this afternoon's cattle on feed report showed any heifer retention. It hasn't for 6 months. But even then, even if we start retaining heifers, it's an 18-month process. So, I mean, we're just kind of keep your mouth shut and hope for the best as it keeps going our way.
Yeah. What about the hog market? We made new lows for the move this week, and the funds have been selling that market here. Are we close to finding some support there, do you think?
Unfortunately, Michelle, I really don't think we are. I mean, we consolidated a little bit around this 200-day moving average, and then we broke and we accelerated selling, and we've traded new lows here each of the last 4 sessions. I'm kind of concerned that we could probably have more downside here near term.
All right. Thanks so much for joining us, Garrett Toy Ag Trader Talk. That is Markets Now.